The question every investor wants to know on Wall Street is, when is the demand for NVIDIA chips going to actually slow down? And I tell you what, the number one way to determine when demand for NVIDIA GPUs is going to slow down is go to their number one customer. Their number one customer is Microsoft. And when Microsoft says we have enough, that is going to show you when demand is going to start to plateau. And when Microsoft announced their Q2 earnings, they also have a conference call. And on that conference call, they gave you an indication when NVIDIA demand is going to slow. We'll talk about when that is. A very good YouTuber would put it at the end of the video to make you watch the entire thing. But after I run down what we're going to be talking about, I'll give it to you right at the jump. And if you want to cut, that's fine with me. I want you to make money. I don't need to make money on these videos. So what is going on, investors? Hopefully guys are doing well out there. We had Microsoft Q2 earnings. Yes, we are going to get into the numbers. We'll talk about the revenue. We'll talk about the revenue based on what the expectations were. We also get guidance on the conference call. We got Q3 guidance for Microsoft. How does that level up and match what the expectations were for over on Wall Street? We'll talk about all of that. We'll go through the numbers. Take a look how sensational these numbers are, even though they were slightly underneath what the expectations were. Take a look at the balance sheet. Can this company afford TikTok? There were rumors that Microsoft could be in the market to buy TikTok. Do they have the finances in order to do that? I guess it depends on how expensive TikTok is. We'll also look at this company from a cash flow perspective. We'll talk about those capital expenditures, how much they're going to be spending on those NVIDIA GPUs and those data centers. We'll also look at this one technically as well. In the after hours, I'm seeing shares down by about 5%, at least when I'm recording this video. But the number one thing that I think we need to bring up was basically a 1 or 2 sentence thing on the conference call. And typically these companies give these hour-long conference calls and they say like one thing that you need to pay attention to. And if there was one thing that you needed to pay attention to on the Microsoft conference call was Azure demand, which gives you an idea on how much more this company needs to continue to invest in their data centers. Because if you're familiar with Microsoft, the past several quarters, they've gotten on a conference call and that they say that their capacity has been constrained and it limits their AI growth. What does that mean? It means that their data centers aren't built out enough to even meet demand. It means their demand is outstripping their ability to meet that demand. That's a great problem to have if you're a company. And if you're Microsoft, you have to continue to invest in your data centers in order just to meet demand, let alone get kind of out in front of it. The company continues to be capacity constrained in their data centers, and that is limiting their AI growth, which means if they had all the capacity that they want, revenues and certainly profits over at Microsoft in the most recent quarter would have actually been higher. But company gave us very interesting insights, and they say, while we expect our AI capacity constraint in Q3, that's the upcoming quarter, but by the end of the full year 2025, so we're not looking at the fiscal quarterly system for Microsoft, we're looking at the actual calendar year. They said by the end of full year 2025, we should be roughly in line with near-term demand given our significant capital investments. So Microsoft giving you a very clear nugget there that their capital expenditures in 2025 are going to be rather high. I think the number that they've quoted you at is about $80 billion. That should bring the company in line with their near-term demand. Now, does that mean they're going to slow down or stop all purchases of data centers? No, but what it probably means is at best, it's probably a plateauing of spend. So meaning it's not going to increase that much, might not even increase at all in the following year. And in some cases, depending on where demand is, it's potential that you could actually see a decline in CapEx spend for the future years. Now for Microsoft, that is good. Once this company kind of builds out their capacity, they can use these data centers probably theoretically for several years. They're going to sink the cost in these data centers and monetize that over several years. For companies like NVIDIA, which rely on selling hardware and have no recurring business model, really for the most part on that, at least it's not a big part of NVIDIA's revenue model. Well, that is a problem for that company. Now, Microsoft over the past year, surprisingly, just up 8%, and that includes being down by about 5% in the after hours. That's after the company announced their Q2 revenue, $69.6 billion in revenue. That was 12% growth year over year, beat expectations by about $720 million. Expectations were just south of $69 billion, although there were some high-end estimates on Wall Street up over $70.5 billion. The all-important upcoming quarterly guidance for Microsoft is always announced on the conference call. The company gives it to you in the different business segments. We'll just total or focus on total revenue guidance, $67.7 billion up to $68.7. Keep in mind that the company likes to beat their guidance. And so, these numbers are sandbagged to a certain degree, but Wall Street estimates was calling for a number closer to 69.8. So the fact that the company's high end is 68 and the low end is 67.7, that is certainly disappointing, particularly by the fact that Wall Street's low end estimate was 68.4. And that is basically where the company is coming at the high end. So that is not going to make investors, at least in the shorter term, love the shares. And once this guidance was announced, Microsoft shares turned even lower. When you dissect the numbers a little bit, at least in the most current quarter, it just paints the picture that you always see with Microsoft. Okay, you had $69 billion in revenue. That was about a little over $7 billion higher, back $7.6 billion higher than it was last year. Your total cost of revenue, we saw this over at Meta. Most of these tech companies have a lock solid cost controls in place, 19.6 up to 21.8. So about $2.2 billion of added cost of revenue. You'd expect as your revenues to continue to increase, obviously your costs go up as well. But what we saw, research and development only ticked up by less than $800 million. Selling and marketing barely moved at all. And your SG&A actually went down over at Microsoft. So your total cost expenses, I don't have a number here, but not up dramatically. So your operating income went from 27 all the way up to 31.6. That's $4.6 billion higher. And again, we added about 7.6 to that top line. So a ton of that revenue flowing through. Now, when we look at the balance sheet, to start talking about TikTok, I don't think the company would unload its entire cash balance sheet, which is currently sitting, I think, if my math is correct, right around $70 billion. They would probably do a mix of some cash, maybe some stock, maybe some long-term debt. That's what they did with the Activision Blizzard deal. So they still have a lot of long-term debt, but they continue to whittle that down. Most of that, or some of that, I think is probably a better way to say it, came from that Activision Blizzard. That was a big deal as well. I don't know. I've seen a varying amount of estimates of what TikTok would cost on the open market. I've seen numbers up at $50 billion. Seems to me if you can acquire TikTok for $50 billion, if you're Microsoft, I wouldn't even blink an eye. I wouldn't hesitate. I would get into that only because Microsoft has proven itself over the years in terms of advertising. It's got the Bing search engine. It's got LinkedIn. And if you look at the growth there, despite people, we all make jokes about Bing and LinkedIn and these types of things. These are like second tier products in their category. Maybe even LinkedIn's a third or fourth tier product, but they churn out money. And so Microsoft, I think, would be able to monetize this asset in $50 billion. Why it might be kind of a large price tag for Microsoft, it's not that much, because when you factor in their operating cash flows, look at this. $22 billion of operating cash flow. Who knew? Selling software that really hasn't changed in 30 or 40 years. Wildly profitable business, believe it or not. Windows, Word, Excel, PowerPoint. I mean, this stuff is the same as when I was a kid. So yeah, you're churning out massive operating cash flow. So if you can get TikTok for 40, 60, $80 billion, whatever it ends up being, I mean, I think it's a great deal. If this company could pull it off, I'd be incredibly bullish Microsoft that they're able to do that. They're churning out big chunks of cash. They talked about how they're going to spend $80 billion in this quarter, in this year on data centers. They just spent $15.8 billion. So you're going to have a dramatic acceleration as we get into Q3, Q4 that lines up probably with like mass production of the Blackwell chip from NVIDIA. So NVIDIA's next 2 quarters probably going to be okay. But the back half of the year is going to be absolutely fantastic. I mean, you have Meta, you have Microsoft, you'll have Amazon. They'll all line up to just load up on those chips. But like we said, I think all of the companies, including Google as well, They're going to be good, and we'll put that in air quotes, good by the end of 2025, to where you're not going to have this massive acceleration where you're going to go from 40 to 60 to $80 billion of data center spend. It might get capped out at Microsoft at 80 billion, might come back next year closer to 70 or 60 billion. We'll have to see. It could accelerate even more than that. You get an I mean, nobody's using AI. If your mom is not using ChatGPT, it means nobody is using AI. And I say that kind of jokingly, but it's actually true. Until the masses use AI, then we don't even know where the upper bands of demand are for Microsoft. And so we'll see what happens. But in the meantime, the company basically telegraphed it for you, and that's where we're at. Company's still paying some dividends, still buying back the stock to a certain degree, $6 billion in common stock dividends, about $5 billion in repurchases. That's actually more than I would have expected, considering last year they did about $4 billion. So this is a company that could pause the buybacks and buy TikTok, continue to invest in the data center, and they'll be absolutely fine. Now, technically, this can be a buy. You want to wake up tomorrow with Microsoft, you can buy. I've had a green box on this one, which starts right at 404, and the after hours are right at 420. If Microsoft's like a 10-year hold for you, I wouldn't see any reasons why you couldn't start a little bit of position. Most of you are probably adding to an existing position. Got no problem with it. If you're trading Microsoft, wait. Just wait until probably several days go by. Wait to see if this level at like 418, 419 holds. If it doesn't, you'll get better opportunities. But again, if you're long-term, these types of things, in 20 years, you're not going to look back and say, wow, I wish I would have gotten Microsoft at 416 rather than 420. The extra $4 is not going to do you, any good over the long run. So technically, it looks fine for a buy. This purple trend line that I have in here, I don't point this out enough. This is what I would consider probably the long-term trend. It's not super well defined on this one, but it's close enough. So you are over the long-term trend, but it's not like back in July and certainly like at the peaks of the pandemic kind of hype. You're not way over trend. So you could pull back to this one, or we can kind of flatten out and meet it at some point. Those both will be buying opportunities. But the big news on the Microsoft conference call is they expect by the end of 2025, they should have roughly in line with near-term demand on their data centers. That's good for Microsoft because it probably means a plateauing, maybe even a decline of their data center spend. Probably not great for NVIDIA, as maybe many expected, including myself, that this trend of increasing CapEx could extend into next year. What we'll have to monitor with a company like NVIDIA is, can we maintain these levels? $60-70 billion over at Meta, $80 billion at Microsoft, 60-70-80 over at Google, 60-70-80, $100 billion over at Amazon. If we can keep going for a couple more years, well, yeah, I mean, there's going to be nothing wrong with NVIDIA stock. And even with this news, there's nothing wrong with that company, but the outperformance could be over. Hopefully you guys enjoyed today's video. I'll be back again with Tesla after this one if you're watching them in chronological order. Maybe you're not. We'll see you again. Good luck with your investments.